You are looking here, Kevin, at harvest time, harvesting your word of the day when it comes to taxes. Explain why it matters to investors.
Well, we know that tax loss harvesting, Contessa, takes place at the end of the year. What's unusual is we're seeing harvesting in a massive way taking place a lot earlier. So when we talk to our trade partners across Wall Street, what we're hearing is that there's a lot of selling, a lot of that's coming in as market orders. Not that that's an unsophisticated investor, but what it means is that people are taking losses, which makes sense if you think about earlier in the year, all the gains that have been made specifically within the Mag 7 space. People are looking to get losses to kind of offset some of their taxes. And that's why I think tax loss harvesting is worth a look right now if you're trying to identify some opportunities.
Okay, you're looking at some of the 52-week lows: Procter & Gamble, Adobe, ADP, Kimberly-Clark, Kraft Heinz, Charter Communications, and then dogs of the Dow: Chevron, Amgen, Johnson & Johnson, Coca-Cola, and most interestingly that you wrote about at length, IBM.
Yeah, and specifically IBM is our stock of the day. We added to that position after this search. To be very clear, stocks making 52-week lows are usually making lows for a reason. None of those stocks came up to the point where we took an interest in them. But you mentioned some really good companies, some really well-known stocks for sure, and maybe they turn up on the radar later. Dogs of the Dow, kind of a similar thing. A lot of them are dogs for a reason, but these are companies that have a much more, I think, quality nature to them, good dividends. IBM specifically, I think from an investor standpoint, the theme of today's show has been about AI valuations. This might be a sleepy, cash-rich AI company.
Yeah.
25 forward multiple, 2% dividend, good stock.